Time now to unpack the aftermath of Facebook's IPO. We saw the stock falling further yesterday, 8.9% in the red, falling to $31. Louis Eckstein, Managing Director from Twisted Toast, here to give us his views on all that's gone wrong. Louis, let's just start with what happened and how did they get the pricing so wrong in the beginning?
I think they were greedy. That's my opinion, and I think they succeeded in that. A lot of people are calling the Facebook IPO a huge sort of failure in that. My opinion is a little bit contrary to that, in that the company wanted to raise as much money for the company itself right at the beginning.
And they certainly did, $16 billion.
Yeah, $7 billion of that will actually go to them as the company, and the other money goes to other shareholders and stuff. But they land up with $7 billion in the bank, and you can build quite a few highways with that. So I think the management of the company is very happy with that. As far as what the market expects from an IPO to pop, that didn't really happen. It popped a little bit on the first day, and it certainly fizzled from there. But that doesn't mean it's the end of Facebook. It's just the start.
Yep.
Louis, I mean, I was reading earlier on to Samantha this piece in the Financial Times this morning. I'll just read it to you as well in case you missed it. It said, in spite of cutting forecasts for Facebook's revenue growth after the social networking group revised its prospectus, the underwriting banks, led by Morgan Stanley, soon afterwards increased the size of the offer by 25% and priced the shares at 38. And we all know what's happened since then. It's down to 31 now. And I was speaking to this chap called James Altucher, who is a 44-year-old ex-trader who's won and lost everything and is now sort of a self-styled market agony aunt. And he said to me on radio a couple of nights ago, I said, is this different this time? He said, yes, it's different. It's going to $100 a share. And every time I hear someone say it's different, I know that it's a lot of nonsense. Do you think that this share price can possibly recover after what has been, quite honestly, a really disastrous listing? Absolutely.
There's absolutely no doubt, Lindsay. It's a real buy, and that's why a lot of people are getting into buying Facebook at this level. The 25% increase in the number of shares issued was, I believe, a decision made by the Facebook finance director. And, it's probably a little bit of greed right at the beginning, and pricing it so high. I mean, the indicative price a few days before the listing was well below 38, and then just before the listing they went in at 38. So they went really high, and I still think that's because the company wanted or needed as much cash immediately into their own bank accounts. The long-term prospects for Facebook are very, very good. I'm not going to call a price on it. I mean, they've been listed for 3 days. I think that's a little bit difficult to do, but certainly over 3 to 5 years, if you buy right now, you're going to make money.
Okay, well, that's an interesting and very bold statement. Actually, if you look back at the Amazon listing a while ago and you compare the two, Amazon in the first 5 days lost 46% of its value, and then over the next 6 months it rallied by 233%. So you're confident that sort of a model can be replicated?
Yes, absolutely, because Facebook has got, Facebook's future is already to a certain extent in its share price, but its ultimate success is not yet in its share price. And you saw it with Google as well. They did very well on IPO, and they continue to do well. I mean, they've just gone crazy. So if Facebook can replicate, if Facebook can become, and I believe they will, if they can become the social Google, well, certainly the price will follow that. It's
interesting you mentioned Google today, because it's the anniversary of the birthday of the man who invented the typewriter. And we've got Google coming out with their fancy gadget where you can press on the screen. But taking it back to Facebook right now, they came out with estimates that their second quarter would fall short in terms of revenue of their previous estimates, and that's why we had some of the underwriters coming out and cutting their forecasts.
Yeah.
So what does this say about the pricing of the IPO? And during the roadshow, you actually had a forecast being cut, and that's what hit the sale of stocks to specific institutional investors.
Yeah, and another thing happened, and that is that General Motors, in an interview with the Wall Street Journal, just happened to mention that they've stopped their Facebook advertising, on which they spent about $10 million at that stage, or estimated for the annum. So that hurt them as well. And why is General Motors stopping advertising on Facebook? Nobody really bothered to analyze the reasons why, and it really hurt them right at the beginning. And certainly, yes, I mean, if they are selling less advertising, their prospects short term are not looking that great. But that doesn't mean in 3 to 5 years' time that Facebook is not going to be a magnificent business, which I believe they will be.
Where's the growth going to come from, though?
That's why did they want to send $7 billion? They wanted to invest in, I think, in two things: is making their advertising offerings better. Okay, because they need to improve on that. They're not as good as Google. Google is beating them on that front. So they're going to invest that money and buy up expertise and probably other companies in gaining a better foothold in understanding how advertising online works now. And secondly, they're going to improve their mobile offerings. Their mobile offerings aren't great. They bought Instagram just before the listing for $1 billion. And why did they buy Instagram? For mobile expertise and specifically visual expertise on a mobile device. So the second thing they're going to do on advertising is introduce it onto the tablet and smartphone application formats, and then that should, like I say, over the medium to longer term, improve their revenue forecasts significantly. So it's a buy.
Yeah, okay. Louis, it is a fantastic company, and we know that the innovation and the sort of team that they've got behind them is going to make a mockery of all the bearish news that we've had out. I mean, one of the reasons why the share price is down is because of the mobile offering, and maybe mobile and Facebook don't go together when it comes to advertising. I just want to ask you one thing. I have an acquaintance who's a deeply disturbed individual. He's completely addicted to Facebook, and I said to him, have you ever bought anything from an advertisement on Facebook? He said no. I said, can you remember any advertisement that you've seen on Facebook? He said no. He said, I said to him, do you want any advertisements on Facebook? He said no. I mean, maybe this is being replicated worldwide with the 901 million subscribers.
Yes, it is. They have not proven direct sales on Facebook. You're absolutely correct in that. And that is what they are trying to do, and I believe that they will find a way of doing it. They are not as good as Google with AdWords on that platform, no. What a lot of companies, I would estimate the majority of companies use Facebook advertising for, is to drive engagement on their own pages. You know, a Facebook page for a company or a personal profile of, you know, those things are all free. So a company creates a Facebook page, and how do they attract eyeballs to that page? Because there are so many pages and everybody's competing for attention. So you advertise on Facebook predominantly right now to drive engagement to whatever the brand content is that you are offering on your own page. And that has been successful. There's a lot of case studies on, on how successful engagement is. And in fact, the General Motors made a point of saying that they will continue using their pages and drive advertising, drive brand content offerings to their pages. But you're right, Lindsay, that is the sweet spot that Facebook is looking for, is direct sales.